Let's talk about some moves real quick. And the first one, to me, relates to what's happened in momentum this week, which has been wrecked. Mongo's down 18.5, for example. Supermicro 17. I've mentioned AppLovin every day because it's been an extraordinary drop of 17% this week, too. Robinhood, I think you can pair it in that list if you want to, down 4%. Why do I bring that up? Because you bought it, Bryn. It's a new buy, and why so?
Yeah, I think, we all lived through Robinhood in the GameStop days of 2021, and I was definitely, no fan of a lot of things that were going on within the company. And I think over the last couple of years, we've really seen this company grow up. And I think what's spectacular as an investor, you can actually go on their website and they print out, they show their monthly metrics, which I think is very helpful for a young company like this. And when you look at what's happening, just looking at this year, their assets under custody have gone from 100 billion to 190 billion. And their crypto trading, which was like 5.9 billion in January, in November was 35 billion. And so I think you have this company that is continuing to grow and get market share from the Coinbases, the Schwabs, the Fidelities. But you have this intersection, and Vlad talked about this, of you have this 2-decade wealth transfer between the baby boomers and the kids and the grandkids, which is a secular trend. But in the short term, in February, we will get their earnings, and they're looking for revenue and earnings growth of 70 and 200%. And so I think this is a really,
I wanted to ask you about that. So the stock has been an incredible performer this year.
Yeah.
It's really one of the biggest back from the dead stories in the markets in 2024, and they deserve a lot of credit. From my perspective, it seems like they're not picking a lane, and they are expanding horizontally into two areas that seem to almost be counterproductive vis-a-vis each other. At the Market Council Summit in Vegas this week, Steve Quirk, who's their head of brokerage, formerly of TD, was walking around talking about the custody business, which they're now in via the acquisition they just made.
Yep.
But then they issue a press release saying, we're going to do sports gambling. Will a lot of financial advisors want a custody on a platform that's also open to people gambling on football and basketball games? So I guess I wonder, going into 25, what is this company going to be? Is it for gamblers, or is it for people entrusting their retirement savings?
Yeah, I think Vlad would say that they aren't meaningfully going into sports gambling. And so he was on, I think, with Andrew and Joe, and was saying that's not what they're going to do. So I would question that. Could be wrong, but I don't think I am. And so I think where, to me though, as an investor, which Fidelity and Schwab have, 13 or 14 trillion. This company has 190 billion. But I think what's important, what I think they're doing to help younger investors, is the Robinhood retirement program has 10 billion in assets under custody, so very small relative to the world. But as these newer investors are getting onto this platform, I think it's going to be very sticky. But they're also doing this Robinhood retirement. They'll do a matching, which to you, Josh, you and I are in the same business. That's so important to get away from this memification and doing zero-day options. And so I just think this is a company that I wanted to take a toehold position. I like what they're doing. Their metrics are great. And I just think going into the next decade or so, this has the potential to be a much larger company with a much bigger impact.
All right, we'll watch that chart. Bryn, thank you for that.